Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Brian Bolin, the editor of Zach's Game Changers and Stocks Under 10 portfolio, and he's also Zach's expert on all things technology. So he joined us back in December to give us his top picks for 2016 in the tech area, and now he's back, since we're in the middle of the year, to give us more picks for this year and to kind of update us on what's going on with tech. Because Brian, I feel like tech has kind of struggled a bit. Like it's no longer the prime time right now.
It doesn't seem to be like the go-to spot, to find like the next big mover. I mean, here and there you're going to have stocks like that, but normally you would see handfuls of stocks in the tech sector outperforming the market, whether it would be, software stocks, whether it be infrastructure backbone for the internet plays themselves, or even the chip stocks. The chip stocks have been strong, but for the most part, there hasn't been that much, widespread growth and appreciation of in the tech space.
No, that's why I wanted to cover it, because I feel like investors really are still interested in it and they want to be in it, but they don't know where to go right now. So here we are.
And speaking of places not to go, one of my picks from at the end of last year, so the beginning of this year, was I wanted to go a little bit,
out of the mainstream,
off the box. And I should stay in the box is what I found out.
Okay. So this one did not work.
Right. This did not work. GoGo was the pick. It's the company that provides in-flight internet Wi-Fi, as well as, systems tracking for the airlines. So they know where the airplanes are at all times and what's going on with them. So that's, it's a twofold type solution for the airlines.
Now, is it just crowded in that space? Or?
Yeah, it's a little bit of there's competition coming into there, and it's also that the airlines themselves have been fighting that and, fighting the actual costs in there. So, there was a big hullabaloo with the American Airlines where they wanted to, end their contract, and that sent the stock down in, pretty dramatic fashion. And what that was questioning, are the other airline carriers going to do the same sort of thing and put pressure on GoGo to, lower prices and be squeezed by their own customers. So when you only have a few customers, that's kind of the risk that you run.
Yeah, definitely. So that's one to stay away from. Yeah,
that one didn't work out. But they can't all be winners, Tracy.
No, they can't. But we're hoping to give a few other ones to them. But let's talk about the chips. Let's talk about the grandpa chips. AMD, it's surging. It's up. I saw the stat, 140% year to date, and it's one of the best performing stocks of the year in like the S&P. Yeah. So what is going on? Yeah, what is that story?
AMD just reported earnings and raised guidance. There's a revenue increase quarter over quarter. So next quarter is going to be up 8%, and we haven't seen that sort of growth from AMD in a long time. And like you said, it's the grandpa chip stock. It's the thing that's been around for forever, and so they've lost that battle. To be the driving chip in most of the computers. Intel has really dominated that space. So what we're seeing here is a surge in obviously orders for something that AMD is doing. And it's like, what is that product that's out there? And at this point, we don't really know, but we've seen, along with AMD, a bunch of other chip stocks that have performed very well over the first, 6-7 months of this year. And I have a theory as to what's driving these chip stocks.
Okay, I want to know.
Right? Okay, so here it is. Breaking news. Virtual reality.
Oh.
It's going to be the next big thing where they're building out these virtual reality headsets, all these things that need these chips. Obviously these things are out there already, but they're not there for the mass market because their price points are, probably too high, and the adoption rates are a little bit low right now. But as the price points move lower by mass production, you're going to get that sort of penetration in the market. And so that I think is kind of like the big thing that's driving these chip stocks right now. Obviously there's the standby things. There's the phones that are out there. Everyone, for the most part, that we've heard, especially from analysts, about Apple, where the iPhone has reached, maturation here on the entire, penetration there. So everyone who wants a phone and needs a phone has a phone by now. There's the upgrade cycle that's out there and that sort of thing that boosts these things. But, the other devices that are available, cameras, the GoPros, if you wanted one by now, you pretty much have one.
Yeah.
And the other devices, the wearables, the Fitbits, those sorts of things, if you wanted those by now, you have them. So it's, there's something driving that growth for all these things, the demand for those chips. And it turns out to be, I think it's going to turn out to be the virtual reality headsets.
Okay. That's definitely something to keep an eye on over the next 6 months. What about the other big guys, the other big players like Microsoft? They already reported they got a big boost off of their cloud business. So suddenly the cloud is all where it's at. And I did notice they said something really interesting in their conference call. They actually compared their cloud business to Amazon's AWS, which is their cloud over there.
Right.
Amazon was the leader in this space, so everybody seems to be chasing them. And they said that they expect their profit margins starting in this next fiscal year, their fiscal year started on July 1st, to equal that of Amazon. Now, I had to go back and look and see what Amazon was doing on their margins. And in the first quarter, they were at 23.5%. So what's going on with the cloud? Is this the area we all need to be in?
Yeah, and to add on to the Microsoft idea from their conference call, they said that they expect profits to double over the next year from their cloud business.
Wow.
Yeah, so obviously there's going to be significant growth, so not only are gross margins going to expand likely, but the number of sales are just going to go through the roof, or at least they're expecting it to. And I think Azure had a Microsoft Azure, which is their cloud product. They recently had a big brand name customer win too, and it escapes me just as I talk about it. But obviously the cloud is hot, and it's the idea that a lot of new businesses and even the old mainline businesses, they need to keep their stuff, and it's basically outsourcing the IT department, right? So we don't want to have XYZ website and our other information housed here local. We want to have it done by world-class quality type servers and access. When you think about that, it's Amazon's, you haven't heard of Amazon's website go down, in years now.
Right.
And it's always been up. It's always been working. There isn't like the down period. Maybe your IT staff needs some time to work on it, and the network will be shut down from,
Yeah, remember when that used to go on all the time?
Used to be a thing.
And they used to have like the weird. Actually, even Twitter used to have this not that long ago.
The fail whale.
Yeah,
sure.
but they haven't had it for a while either.
Right, and they've kind of come to grips with what's going on there. And then all the new businesses that started up, as they just got started, they used the cloud because they didn't want to have that financial burden of buying that server. Why not rent that space?
Right.
And then as you can scale better. You don't have to be buying new servers or bigger and better things. You can always scale on, the best of breed style stuff. So the cloud is definitely something that's here to stay. Obviously, there's still a lot of growth that will come from that because there's going to be still more transition from existing businesses that are off, either offline or doing their own thing to moving onto the cloud just because of the reliability of it, and actually the costs of it are more advantageous to small businesses. And Amazon is known for lowering prices. I think a year ago, if I remember right from their one conference call, they said that they had, something like 23 price decreases over the last, 12-month period. And you think like, well, geez, they're going to lower prices, once every couple weeks, basically, if you're saying that. So that just tells you that there is demand for it, and they're going to bring more people in with lower costs.
Yeah, I saw some revenue projections this year. They're supposed to make $10 billion in revenue off the cloud. This is Amazon.
Mm-hmm.
And then if they're still going at this rate, or if they do what Microsoft is doing with their cloud, then you can project out, closer to $20 billion for next year. And this is where all of their profit is coming from. It's not coming from the retail side.
Right. The retail mantra there at Amazon is keep the price as close to zero as possible.
Yeah.
And we can survive on razor thin margins, because we're going to bring in more customers.
Right.
And at some point you do allow for that scale then to increase profitability by, a move of 1% up on your pricing would be a significant event.
Now, what do you think about valuations on any of these? I mean, I'm just speaking as like a value investor. Obviously, most of these are not values that we're talking about, and we're looking for the growth. But does it trouble you when you start seeing, Amazon, I don't know what it's at now, 70, 80 times, or maybe even higher, Some of the other ones we've been talking about aren't all that cheap either.
Yeah, the valuations is always kind of that tricky subject there when you're talking about tech stocks and growth stocks in general. You always want to buy it looking for more growth. If there's
Okay.
more growth out there, there's going to be more investors, clamoring for that growth. That's the thing that drives stock prices higher when there is that sort of market. And I think we are in that sort of market right now where people that want growth are going to pay up for even more growth. So as long as there's continuous growth, you're going to be okay. But the moment that there isn't, that's when your head gets cut off.
Yeah.
And I like to say that there's a big difference between what a growth investor will pay for a stock and what a value investor will. And it's generally like an 80% difference, right?
That's
so
right.
that stock really needs to tumble from being a growth high flyer to being something of value. And it's a gigantic drop, and that can be 75, 80% sometimes.
Where do you put Apple in all of this? Speaking of value stocks, because that is one,
Right.
but it doesn't really have the growth now. So would you even consider it a growth stock?
I don't know that I want to touch the Apple right here
Okay.
because
They're reporting.
they're
Right.
reporting
when we're recording
lots
this.
lots going on in that story.
All
They're,
right.
they're saying that the iPhone is at full maturation now in that cycle, and if there isn't going to be that many switchovers. You either have the Android or you're going to have the Apple. So.
All right, we'll wait on that one.
I'm avoiding that because it's becoming
Yeah.
so much more of a straight hardware play,
Right.
and there hasn't been that gigantic development, in or from Apple that it says I need that iPhone because of the software or the difference of the service or the thing that's there, to make me want this phone versus that phone,
Right.
or this iPad versus some other tablet, or even a Mac computer versus a PC. So to me, Apple's a kind of more of a show me story right now.
Okay. I was looking around though to see if I could find any kind of growth tech names that did have decent valuations because I just have to look for it.
Sure.
And I found one small little company called AVID Technology. The ticker is AVID. They're trading at only 6 times, and they're supposed to grow earnings by over 100% this year and another 30% by next year. Their track record on earnings has not been good. They've missed like every quarter the last 4 quarters. But they are in the digital media area, and they do the software that all the creatives use, apparently. So if you're doing a TV show, you use their software to edit. Musicians use it also to put together their music. I don't know. Danny's probably using it. He's our podcast guy here. He's probably using it right now to like put this podcast together. I don't know. But like a company like this, at only 6 times, this looks like it could be an interesting play.
Right. And I think that fits in line with the explosion of content that's out there, whether it's movies or TV shows, web content, for videos or even for podcasts, that's just becoming so much more prevalent that you need a tool, to help you produce more quality, more professional type stuff. So obviously the big names are going to be looking at that, using their software.
Okay, so do you have any other hot plays that we need to be filled in on, going here in the next couple months, the rest of this year?
I think Infinera is kind of a good pick here. The stock is down around $12. It bottomed out in the 10 handle during the Brexit. They did, purchase the other year. They purchased a company in Europe, so there was that European exposure there, and that stock really did get beat up. And at the end of the day, the pipeline, the backbone to the internet, is something that everyone's going to need, especially large scale companies that need that big bandwidth, of optical networking there. So that's the type of thing where I don't see this thing going that much lower, and I think the upside is much greater than the downside, especially right here at $12. I think, max downside you're looking at another 20% or 20% if you want to, get back to retest the lows. With the current market condition, I think everything's getting figured out. This Brexit isn't going to kill their business. People are going to be demanding this sort of thing. So,
Okay.
I would see a good chance for this stock to get back to the highs, within a year or so.
Okay, I saw that they're supposed to grow earnings by 15% this year, so that's pretty strong. Their ticker is INFN for anyone who's interested in that one. And I guess we've covered a lot of the big names here. What else are you looking for? What are you looking for this earnings season? Because we're only just kind of in the beginning.
You're really into the very beginnings here, and the one thing that I've noticed is that there's been very few what I like to call clean beat and raises. So where a company will beat on the bottom line, beat on the top line, and then raise guidance. Normally, by this point in the earnings cycle, I'll have more than two handfuls of companies that have beaten and raised. We beat on the top, on the bottom, and raise guidance. So that really isn't there this quarter so far early on. And I know, again, we are very early on, but the last few quarters we would see that. So I think that speaks to possibly the optimism out there, that it may not be as strong as it has been over the past, but there's plenty of beats. We see that on the bottom line and on the top line, and that's kind of natural. But the guidance increases just aren't there as much. And that makes those companies that do guide higher that much more attractive right here. AMD obviously is one that we just talked about before. SIMO is Silicon Labs, SIMO, recently guided higher as well too. So those are two chip stocks that have done that. Obviously, I think the chip plays are still going to be strong. If you can have multiple ships in the single harbor all moving higher, then that the water beneath them is kind of helping.
Yeah. What about tech IPOs? Anything out there? It's pretty dead.
I've been so burned over the last year or so with grabbing those IPOs a little bit after they've been public, and then seeing them blow up in my face. I think I'm wearing one of those IPOs now. Fitbit didn't do so well for me after getting there, so I'm staying away from those right now. And nothing new that's out there on the radar screen is lighting my
none of the big ones, like let's say like if Airbnb or Uber or one of those guys happen to go IPO, would that interest you?
Definitely Airbnb would. The Uber story I think is almost pretty much played out, especially with all the financings that they've done. The huge growth is almost really behind Uber at this point, and I think you're only going to see declining growth. So obviously, when it does go IPO, it'll be a big story, but I don't think it'll be something that I want to dive in after.
Okay. Well, this is good. I know everybody always likes the tech stocks, so be sure to check out all the articles Brian has on Zacks.com about tech and growth stocks in general, and you can also check out his services, of course. He has the real fun one, the stocks under $10. That's one of my favorites.
Oh my gosh.
It's hard to buy those. That's a lot of fun.
Sometimes you just got to plug your nose and say, I know this is a cheap stock, but you know what? There's a chance that it works out.
Yeah.
We've had a lot of winners. We've had some losers too, but a lot of good names on there right now.
Yeah, it's always a gamble, but that's what makes it fun.
Right.
And then you have the game changers. That's also kind of gambling riskier.
Yeah, we're looking for the stocks that are, disruptors, that are changing the game, that something different is happening in the story that makes it, really worthwhile to take a second look at. I think recently everyone in the office likes to make fun of me for when I added General Mills as a game changer. And they thought, cereal is a brand new thing. But that wasn't really the point. But, and we closed that trade after just a couple of weeks with like a 14 or 15% gain. So,
nice gain.
There are things that the game is changing,
right.
when people look at General Mills, or at least it did for me for a while.
Right. Even the old companies can change. I guess that's what that motto is. Yeah.
The game is constantly changing. It's just who's changing it best.
That's right. Okay. So you can check all that out on Zacks.com. You can check out our last podcast, the December one. I'll try to link to it in the article to this, but that's also on SoundCloud and iTunes. I think it was around December, like the best tech stock picks of 2016, I think it was called. So check that one out too. Don't buy the go-go though, but check that one out. Has some good ideas. And you can always find all of our podcasts on both SoundCloud and iTunes, as well as on Zacks.com. And so for everyone here, I'll see you next week.